What if there was someone you trusted very much, whose job it was to lie to you? I'm David.Rosen, and this is Inside the Broker's Studio. Today we're going to discuss investing in stocks versus owning a home. For every time a financial advisor advised a home buyer not to buy, I have 3 questions for you to ask your financial advisor. Number 1, which stocks do you buy? Are they focused in the oil sector? Exxon used to be the gold standard of investment portfolios, but in the last 10 years, it's faced a huge headwind and it's gone down. What about cannabis stocks? What? Oh, yeah, those can go really high. The stock that performed best for me, David.Rosen, was a Chinese national copper utility company which privatized a private school arm called Hailiang Education, which was acquiring private schools in the States. Oh, that's not a sector your financial advisor is hyper-focused on? Interesting. The point is, it's impossible to know where growth stocks are. Exxon goes down, pot goes up, and Hailiang went up 400% during the month that I owned it. It's anyone's game. It's absolutely gambling. Number 2, robo-traders. What's that? In 2008, and this is written about in Michael Lewis's book, Flash Boys, the stock market's decentralized as part of the financial crash. That means today there's about 20 financial stock markets owned by people like Goldman Sachs, Merrill Lynch, that privately own their own stock exchanges. And on these exchanges, you have computer algorithms that are owned oftentimes by the banks who trade and own the exchange. What they're doing is they're trading the same stock that you want to buy 1,000 times between the time you say you want to buy it and the time that they deliver it to you, making sure that they make a huge profit. Read Michael Lewis's book, Flash Guys. It's a rigged system. Number 3, even without robo-traders or picking the right stocks, how far are you removed from your investment portfolio? If you own a mutual fund, you own a bunch of stocks, and they call that diversification. Or if you own an ETF, you own a whole bunch of stocks in a certain sector, like gold. If you own a gold ETF, are you owning a gold mine? Are you owning a gold trading company? Are you owning a trading company that trades ETFs? Oftentimes you're owning all of those things. And there's so many employees and so much money coming out of those companies before it gets to your shareholder value that it's actually incomprehensible. The amount of separation in any stock, even if you own, IBM stock, between the amount of money the shareholder gets and the amount of money the corporation can spend on itself is hard to discern and intangible. For example, Amazon was not profitable for 20 years. Now they're profitable. They were doing is taking their profits and reinvesting in the company. Well, if you're a shareholder, that means they're taking money away from you to reinvest in their long-term growth. That's great for their company long-term, but if you want to cash out before their maturation date, where do you sit? You have no control. Don't get me wrong. Like most Americans, I invest in the stock market, but I also invest in real estate. And the big difference for me as someone who's had wins and losses in both real estate and financial markets is that when you own a home, you can see what you own. And when you own a stock, you simply can't. Thank you. This has been Inside the Broker's Studio, and I'm David.Rosen.